Hello traders, welcome to week 52 technical analysis of GU. When I say GU, I mean GBP USD. All right. If you have not subscribed to my channel, please do. That is the only way you can encourage me to keep releasing videos. It's not easy. All right. And do well to activate the bell sign so that anytime a new video is released, you'll be notified. All right. So first and foremost, what we'll do is you go to uh, forexfactory.com where you know what is ahead of the week, and as these serve as uh, economic news, which is the fundamental analysis. All right. So do where to go to forexfactory.com, click on calendar. Me, I only filtered the uh, high impact news. All right, that is why you see all of this. All right, just filter, then you click on filter here, select the high impact news, which is a red envelope like this, so that you know the ones that will be impactful. All right, haven't done that, go to my website www.egainsfx.com. Go there, register, and start studying. There are a lot of materials in there. So you start studying and also do where to send us a mail so that we can train you. All right. So I tell you, with all the watching of YouTube videos, you cannot get the whole details as regards to forex. You need a mentor. All right, you need a mentor. All of us, at some point, we paid for a course for somebody to mentor us. It's not easy because you will just be struggling. You need somebody to show you how forex works. Otherwise, you will have issues in the sense that by the time you'll be faced with tough time as you are trying to find your feet, there's what we call analysis paralysis. It happens. If you're not careful, you develop problems. So you need somebody that will break everything down, make it simple for you so that you know what you are doing. Otherwise, if you are trying to figure it out yourself, it's very, very dangerous. Having said that, we are on GU. You can see GBP USD. When I say GU, that is GBP USD, Great British Pound and US dollar. All right. Last week, yeah, this is a trade I took. It's just 122 pips. All right. What happened was, you remember, guys, we we had we after our analysis, we established that we are still bearish. And today, if you see all these things, you discover that we are still bearish. The trend is bearish. All right. Remember, this was the other block that I placed my trap. I was waiting for price to rigmarole like this, then come and tap me in. All right. All price moved, and when it created this high from here, I now see that it started coming down. It created this low. When I noticed that it has created this low, I knew it was going to pull back. So it actually pulled back and created this lower high. All right. When I mean lower high, I mean this high is higher than this. This is lower than this. This high is higher than this. This high is lower than this. So this is where price action started pushing to the downside. When it got here, it created a low, then it pushed back. When it retraces, immediately it created a high. I just missed this move because I was busy. I noticed when it was now creating a kind of a sideways move here, coming down, I knew it was going to break a structure, but I was busy. I missed this. All right, I missed this push. All right, is the push that broke this structure. All right, you can see it's marked as a break of structure. When price moved, created another low after breaking this structure, I now discovered that after breaking the structure, it created a low. What I now did was to wait for price to pull back. Like I told you, I have two strategies that I trade. All right. But as an SMC trader, I trade SMC. What we'll do is filter the trend, know what caused a break of structure, the origin that caused a break of structure, then highlight the candlestick that caused the break of structure to the upside or the downside. This is a bullish order block. All right. It's a bullish order block. All right. And I marked it out. Once price gets to this point, it's supposed to dish out a buy. All right. So my trap was here. Immediately price got here, it created a low. Then I now noticed it was price now started pushing to the upside. What I now did was my second strategy, I applied it. All right, this is a high, all right, to this level, okay, to this level. What now happened? I waited it to trade into this um, golden level here, 61.8 and 79.8. Anything above 50% is what? A discount level. So I waited for it. I was free then. Immediately it got to this point, it started pushing down. I allowed this opposite candle, this is a bearish candle, to close. Immediately I entered. Guys, it was just a very smooth ride, 122 pips straight off to the downside. And guess what happened? It now activated this trap, my pending order that I placed here. It was activated. What happened was that it did not really hold. It was activated, it dished out a little buy, then sellers overpowered, then this level failed. It now broke the structure and created a low. All right. If you can see it very well, you discover that there is a bullish candle here. Immediately it got to this level, he activated my pending order. After this push to the upside or downside, negative 27 was my target point. I took my profit, then he activated my pending order. But instead of this level to dish out a buy for us to experience a bullish run, what happened? It failed. It failed. All right, it failed, and there was a push to the downside, a little push to the downside. Then it now created a low. Well, there's no problem. It stopped me out. That is how it is. There's no problem. Since it did not respect this level, it violated it, there was a push to the downside. What it then means is that sellers were more than the buyers. So that is trading for you. I accepted my loss, but I had already made profit as I was coming down 122 pips back. Then when he stopped me out from the pending order that I placed, what happened was when I saw it created a low, then he now started pushing to the upside. After that, I simply what I now did was brought my fib to this level, the 0% to the low. Then I now discovered that it got to this point again. Then it was around 8 on Friday. It was around 9, sorry. It was around 9 on Friday. Then I waited. There was a little um there was a little um he wasted a little time here. He consolidated a little. All right. There I now see a bearish engulfing candle. I allow this candle to close. All right. Immediately this candle closed around 9 o'clock. Then the market almost closing. Then I had to enter. All right. I had to enter because I knew that this is a smooth ride for me. And where am I targeting? This low. I'm targeting this low. All right, is 100 pips. So once market opens today, let's see what happens. All right, so at this point, we are still very much bearish until this push is confirmed. We can now see that this strong low, this weak low, if you follow from the main structure, this is a strong high, all right? It pushed to the downside, it created this weak low, all right? There was a push to the upside. Here, we experienced change of character here. Then you now see price action pushing to the upside. Then he now created a high. You can see since he created this high, none of this level has taken out this point. So we now have another strong high. We now have another strong high here. This is the level. We now have another strong high here. We now have another strong high here because price action has created a strong high. He did at this point. All right, now we have price created a weak low here. This is a weak low. Price has created a weak low for us. This is a weak low, weak low. So like I told us, we trade from the strong high to take out the weak low. All right. So at this point, we'll be looking out for price to come and violate this level. How soon it is, we don't know. From the experience, you can see this was the last low, the weak low price created, but it moved. It went once it get to this point, this that dish out the push to the upside, there was a change of character. He started pushing to the upside. Now he has created a high. He has created a high, all right, because we are still bearish. We are still bearish. Have that in mind. As we are coming down, there was a break of structure. You see this push to the upside, there was a break of structure. It created another low, it pushed to the upside, that is the retracement. All right, he respected it, and you now see the bearish run is about to resume again. So what I now did, I'm already on this trade. I'm just telling you, what I'm expecting is 100 pips. Don't be greedy. My target is this low, this low. All right, even if you brace, get to negative 27.0, I don't care. Let it just give me 100 pips, I'm fine. So as soon as this push is completed, we'll now wait and see whether a change of character will happen from here that will now start pushing this price to the upside. Otherwise, we are still bearish. We are still bearish. As we speak, my directional bias is that we are still bearish. All right. So, like I told us, as an SMC trader, what we'll do is do our top down analysis, look for a break of structure. This is a break of structure. All right. You now look for the other block that caused the break of structure, which is this very guy here, is the other block that caused the break of structure. All right. You now have to wait for it for price to come tap and before it will push to the downside. Since we are bearish, all we'll be looking for is selling opportunity. Selling opportunity. That is what we should be looking for. What we have break of structure here. This guy caused break of structure. He was able to break structure to the low side, and this guy too is able he was able to break structure to the downside. So, guys, when you want to set your pending order, all right, when you want to set your pending order, like I told us, I trade two strategies. The other ones I will not teach anybody. Is that one is reserved for my students. All right, is reserved for my students, for my mentees. They know you can set a traps as an SMC trader, set your trap, look for the other block, set your trap, but monitor the market structure. Monitor market structure. Once you see an opportunity, you apply the other strategy to take the money off the market. That is what is important. All right, take the money off the market. That is just what is important. Like on Friday, when I noticed there was a push and I missed this push to the downside, then I just noticed I has created low after breaking structure. It was to pull back. What I just did, put my fib here. All right, I put my fib like this. Market tapped, it went to the upside. Then I entered immediately. I short to 27.0, negative 27.0, 100 and 122 pips as fast as that. So this is a very simple strategy. If you want to learn about that strategy, just inbox me. I will teach you. Just within 1 week, you master it. It's a strategy, straightforward strategy. If you are the type that trades every day, you don't need to continue to, maybe you want to start to trade every time. No, you have to filter uh, most of the opportunity that the market presents. All right, it's not every opportunity that you just jump into. Filter and take the A plus one, the ones that you know that are really, really, really set up. Once it gets to your level, just enter without any hesitation. Enter without any hesitation, and you see you just get a smooth ride. Enter, place your stop loss, your entry stop loss, your target, negative 27, negative 27.0. Leave the system to execute the remaining one. You don't need to do anything. Just let it play out. After you have placed your order, put your stop loss, your target, you can close your system and allow uh, price action to complete the other job. So, guys, our directional bias is bearish. We are still bearish on GU. So, guys, I urge you guys to learn more about trading, and most especially, you must be patient. All right, you must be patient to wait for your setup, and once it shows up, don't hesitate to take it. Thank you. God bless you.